We brought this panel together because we want to see how we can be effective in writing business across Africa. Arnold, EPA is not an insurance regulator, but we've asked him to join us at this forum so that we can get his perspectives from taking ETI from 9 countries to 35 countries across Africa. Now, I know the common thing across Africa is that of low insurance penetration. And Africa is supposed to be the fastest growing continent, and fastest out of the top 10 fastest growing countries in the world, 7 come from Africa. So why do we still have such low insurance penetration? How much regulatory reform do we need to assist us as practitioners in deepening our markets? We have a lot of specialists. You mention any of the big insurance or reinsurance companies across the world, even as far as in China. There are many Africans working in those cooperations. Why can't we get them back to assist in developing Africa? Is low penetration because of our culture, our cultural beliefs? What can we do to overcome all this?
The sector has been growing at a rate of about 20% per annum for the last 6 years, and the penetration is still below 1%. The uniqueness is what we have noted is that the sector is young but growing very fast. And the challenge with this is that some players are attempting to grow, sometimes at the cost of service delivery to the customers.
The issues we've been grappling with in this market, first, it is as a regulator trying to find a balance in the tension between prudential supervision or prudential regulation to ensure that companies are able to meet their obligations, but on the other side, looking at aspects of the conduct of those companies to ensure that the consumers are treated fairly and therefore improve the perception of insurance in our market, which will contribute in the long run to the insurance penetration. So we have looked at the challenges around how are risks managed within the business side, and particularly taking into account that a facilitative role to ensure companies are able to innovate in their products is taken, but ensuring that risks are adequately managed. So we are looking more in the area, obviously, of risk-based supervision, which translates into allowing companies to manage their risk, even as they take on new products and new lines of business, and moving away from having tough laws to having strong laws that are consistently applied.
The regulator is a friend of the insurance companies. You can't divorce it. Truly, the regulator is a friend, and I'll tell you why. What is our primary responsibility as regulators? Our responsibility as regulator is to protect primarily the insuring public. They need to be protected. In doing so, we enable the insurance companies to do their business effectively and profitably. How do we do that? By insisting gently on corporate governance. And somebody said to me in the Nigerian market that corporate governance codes are no laws. there are rules, there are minimum recommendations to doing business. Yes, but when we gently tap you at the back to imbibe corporate governance, we are helping your business. We are enabling your business. An insurance institution is a public trust, just like the banking institutions are. So, unlike a petrol filling station where you can wake up and decide not to sell on a Monday, you can do that, and nothing. You've not broken any law. For insurance institutions, there's a public trust. Every 100 naira, every $1 you invested as owner of business, you have public fund that is in excess of 500%. Therefore, insurance is a regulated entity, and the nuisance that the regulator constitutes must be tolerated. It must be understood as enabling your business. Enabling your business.
Let me talk a little bit about the tangibility of insurance. You know, we were trained and told that insurance is an intangible product. But the mobile industry, the mobile phone industry, has shown us that if you introduce something that is tangible in Africa, everyone will come on board. Insurance has been around for many years, from the colonial times. But only a few people have come on board to buy insurance or use insurance, this kind of insurance that we're used to. But the mobile phones that came in only yesterday, everyone here is a member of one or two or three types of mobile phone providers because of the tangibility of their services.
The insurance industry and the banking industry share a lot of things in common. Banking is considered the most highly regulated industry in the world, and I think insurance is the second most highly regulated industry in the world. Secondly, I think banking and insurance are about mobilizing capital and about managing risks. At the end of the day, that's the business that we do. But I think beyond that, the question is, every industry has to have a relevance in terms of the economies in which they operate. And that relevance comes from making a difference, from empowering growth, empowering development. And the question the insurance industry has to ask itself is whether the regulations in those industries do result in growth and development. We're all in Kenya, and we all know about M-Pesa. M-Pesa was developed by the Kenyan Central Bank, and they empowered it. And currently, globally, M-Pesa accounts for 50% of all mobile payments. And that's because the regulators went beyond asking people to bank in branches and use agents, pharmacies, little shops. The courage to move regulation to empower change is where the challenge is. Regulation has to ensure stability, but regulation also has to result in growth. But I'd like to leave you with a very simple thing. If you look at the UK, the biggest banks are British. The biggest insurance companies are British. Same thing in the United States. Same thing in China, South Africa, Italy, Russia, Germany. The exception is Africa.